Yesterday, former Cleveland Fed President Loretta Mester told us right here on the program that if the Fed is making a series of cuts and risks to the labor market are to the downside, why not cut by a half point? Former New York Fed President Bill Dudley echoing that sentiment, and market probabilities of a half-point cut just jumped to 45%. As this gets more interesting, let's bring in Kathy Bostjancic, chief economist at Nationwide Mutual. Kathy, you're undergoing this sort of same evolution that the markets are and leaning towards a 50.
Yeah, hi, Kelly. Happy to be with you. Well, we had thought for a while that they actually should start with 50 basis points and, just in general, get back to a more neutral rate as soon as possible. There are stresses in the consumer. Interest rates are high. Fed officials' own acknowledgement is that policy was restrictive, and it was there because they were worried about inflation. And now if concerns have shifted more to the labor market, which I agree that's more what the risk is. Why not? I agree with the former Fed officials. Why not start out with 50? And it is going to be a series of cuts. The interesting rub there, though, is that the guidance we've gotten from current Federal Open Market Committee members is that they're more comfortable going cautious 25. So I think that's why the markets are really divided right now, and it's coming down to be an interesting first rate cut.
Steve, without putting too much pressure on you as we head into the weekend, many who are watching this quite closely are saying, okay, if I'm the Fed and I'm thinking maybe 50 is what I want to do, I've got a couple of days between now and then if I don't really want to catch the markets by surprise. Are you hearing anything out there in the ether that might suggest whether this is something to be expected?
No, and it is kind of interesting that we're going into this without very much guidance on this 25 or 50. I think while the Fed was out there talking, the market was pricing in 25, and the Fed wasn't doing much to change our opinion of that. I think that might be instructive.
True.
It's funny. As a journalist, Kelly, I've always lived by the idea, if you can think of it today, you better do it today. Don't leave a story for 2 days from now if you've thought of it today, because somebody else is going to think of it. I wonder if monetary policy ought to run the same way. And I think what's happened here, well, two things have happened. I think that these comments from these former Fed officials are really what's moved the market, is that since all of them can, and by the way, it's a pretty broad spectrum. Loretta Mester, maybe a little bit on the hawkish side, Bill Dudley, maybe a little bit on the dovish side. Those two folks coming together saying they could make a case for 50, which means if somebody came to the table and said, here's why we should do 50, then those people who are, on the fence could go either way and maybe would side with it. I'm still in the 25 camp. I think that that's where the Fed was pointing us to when they were talking. And I also think that it's interesting that the market post-CPI got much more confident in the 50, in the 25,
absolutely,
because it was a little firm. So I'm kind of tempted to sort of go with that feeling yesterday and maybe fade some of these ex-Fed official comments.